Welcome to TradeTheMBI.com. This is John. This report is for the 4th. Well, not a surprise. We stabilized right below the APM. We're ABM yellow right here, and we're just back above it slightly. Again, just isn't enough short activity to drive things. Yes, we had DOC spread, which we created the weakness, but you had a reset of the DOC here. Steel and the short-term buyers popping back up. Still relatively weak from that standpoint and dipping to negative, but not breaking down. It's a positive, and you can see that we've moved above the red line here on the extreme histogram, and that means that buyers filled in the void, which is all it took. So there just isn't any dramatic, because again, where are you going to go? There just isn't any place else to put it other than what we're seeing people put it into, which is gold. And a little bit into crypto, but mostly gold has seen the strength of it because it's become rather evident the Fed is not making any serious attempt to tackle inflation and the political environment. And this is something that economists always forget when they're doing their little math play. They don't take into account the political reality and how it affects economy, because at the end of the day, many decisions are made based on taxation and regulation, and that really affects things. From a NASDAQ standpoint, you can see we've crossed back over here. Well, it may stay that way for the day, but we'll have to see. But we were slightly below with the magenta under yellow, which is weak, but again, not enough short interest to drive anything. And again, a turnaround of short-term buyers popping back in. And it really leaves little doubt that, with new money coming in, we were expecting some kind of move. Now, the fact that it's muted is a little bit of a warning, because any pullback in that, and that could be a problem. But rates still above where the potential of inflation in that is going, and everybody knows where it's going to be, much higher than it currently is. And that isn't going to change anytime soon, because there's no policy to justify the change. Now, they're going to say that oil is increasing because of world situations and the whole geopolitical conflict. But at the end of the day, you have this AI-driven fuel of wanting to convert everything into AI, as well as massive energy demand that can't be met with the continued regulations that exist in this current political environment, and that is going to continue to drive oil. Now, the interesting part of that is, part of the argument from the current political environment is that, oh yeah, well, higher oil prices, higher energy costs in general are a good thing because it will make renewables cheaper. And when you have this massive move towards EVs and everything else, you need more power, and it just is not going to be available, and that is going to drive further inflation, because energy always drives inflation, whether it's converted to electricity, gasoline, any kind of fuel. It's a built-in factor. And so you've gone from an era where energy was cheap and things thrived, to where now it's going to be constricted, and that's just going to push things more towards large corporations. I mean, in an odd sort of sense, you can refer to it as a neo-fascism, where companies, certain ones benefited by the political class, are going to thrive, and it's going to really hamper small business and individuals, which for the most part are the driving force behind most of the economy. And you can see a massive move back from the euro. No particular given reason, other than everyone can see that the acceleration for debt and everything else for the US is going to accelerate, but it's not any better from a eurozone. And so, when they all talk about the end of the dollar, it's like, well, but euro's in far worse shape, and so is the yen, and several other currencies. But you also had that bifurcation in the world, moving towards BRICS. So there's a lot of geopolitical dynamic mixed in, and that really affects the current economic situation and how things are going. There's not going to be any abatement in gold. This is modest so far, in my view, and has been for quite some time. And that reality is just starting to sink in, I think, for a lot of people, that there isn't any attempt to recover. And it's certainly not going to happen in an election year. Nothing's going to change from that aspect. Though, as things continue to get weaker, when you see from an actual, employment recession version versus like what we were talking about the other day with GDP still holding up because you've had this labor shortage from a demand standpoint, which now is pretty much eclipsed when you've brought in, an extra 8 to 10 million extra people, and they will fill in a lot of it. Their economic activity isn't going to be enough to, justify anything, but it certainly fills a lower end labor force need. And from a cryptocurrency standpoint, it's stabilizing up towards their highs. There's nobody's running from the crypto market either. It becomes to a degree an offset, and depends on what it is, depends on how functional and growth based it is. The rest of it is just speculative hype. From an ETH standpoint, still below its 61% range there. Slight improvement though. It hasn't moved the magenta over yellow yet from that standpoint. But I think you're going to see this back and forth where there's going to be a significant rotation into more energy, and you can see that ESG and the DEI stuff is starting to fade a little bit because it's affecting profits for a lot of companies and not working out. And again, another economic reality given political push that is, investors had, created a situation where you had to do certain things in order to get their, support, or they would sell your stocks. And so that wasn't for economic reasons, it was political. So again, you can see how you have to weigh some of that reality into understanding why things move the way they do. And at this particular stage, you can see there's a conflux between the push and pull of each of these events and what they mean. But there's a huge majority that doesn't, well, I wouldn't say majority, but just a huge portion of the current political class that thinks that higher energy costs and that are a good thing. But we all know what that does. It drives inflation and is devaluation of the dollar. And again, the market's not going to suffer the devaluation, so it's going to have a higher print to make up for that relative to then what earnings and everything else are. And for now, the economy is still posting positive GDP with, the government spending what it is. And as long as it continues to do so, things are holding on. The problem is the utility of that becomes less and less. You used to be able to put a small amount of money in, and the government could cause GDP to ramp up. But now you're not moving towards innovation and or individual growth. You're moving towards higher government growth, and that tipping of the scale is going to lead to a disaster, because you end up with a bunch of higher paid government employees, and because now it's more beneficial to be in the government than it is to be in the private sector. And that's just the inversion of how things need to be for sustained growth. And so we know where the growth trend line is going to be going. And that eventually will have an impact on stocks. It's not happened yet, but you haven't seen crisis modality build yet until things start to really turn south. And it's unrecoverable, the amount of money you have to spend when things turn to a recession and you have rates continuing to rise because the Fed can't reduce into this current situation. So you can see hitting the 50% right now, still positive with the magenta over yellow, and that green has taken over cyan. We're about to tip almost cyan below red at this particular stage. And when that happens, you know what we're going to get, another push back towards 100%. So that's what the current readings are. You can see what we had, the morning pump, afternoon dump, filled it all back in, so that was perfectly healthy within that, and then they brought it right back up to the same level and pushing it again higher here in the pre-market. So this is what you can expect to see. A lot of that has a bigger portion to do with what we're seeing in the change from a market dynamic move towards options trading, and that gamma and those situations are really important to drive and then collapse. And that pushes a lot of that money. And the interesting part about that is, though, a lot of that money is destroyed completely, because once that's lost, you're not getting it back, because options from that standpoint don't retain them. At least holding a stock, you actually have the thing. So it's just another dynamic of the change in how activity is taking place in the current environment. And some of that may have to do with the fact that some of the stock price tags have gotten extraordinary to purchase shares for regular investors, but they're not really the ones that move the market despite what people think. There is a smaller echelon that really has the significant buying power to make movement. And that's something we've talked about for many years. It's not as universally public as possible. And you had that rogue period where they were able to do things with Reddit chats and things like that, but those days are fading, I think, pretty quickly. So, as always, though, anything relevant, I'll put on the Skype chat. But have a good one. Trade well. We'll talk in later.